Hello everyone. We are starting right now, checking just connection and waiting the last seconds before all people connected. If you hear us, please put something in the chat. Oh, we can see. Yes. Great. So, couple seconds and we are starting. Yes, I believe we can. So welcome everybody. Thank you for joining us today. I'm Vadim Rozov, CEO of Simplify Labs, and I'm really happy to welcome you to this webinar on topic what is both urgent and essential for everyone in crypto industry. It's adapt or die, an urgent shift from VASP to MiCA. As you're all aware, the regulatory environment for crypto assets is evolving quickly, and the upcoming MiCA regulation represents a major shift, particularly for crypto exchanges and service provider operating in the European Economic Area. At Simplify Labs, we are specialized in helping crypto companies navigate the rapidly changing landscape of compliance by providing with them MiCA-ready technical solution. This is one of the reasons why we decided to organize this webinar, to offer practical insights of how to implement MiCA requirements in real-world operation. So first of all, let me introduce speakers. We are starting with Kevin Planton. He is CEO of Kyrrex. It's operating crypto exchange with license on Malta. Kevin was one of the first who has been in forefront of addressing regulatory challenges in crypto space. And under his leadership, Kyrrex has been actively working to align with MiCA upcoming requirements. Kevin will share his first-hand experience of navigation these challenges and the solution Simplify Labs has implemented to help Kyrrex become MiCA-ready. He's also discussing partnership and possible sub-licensing option offering to help companies meet ongoing compliance obligatory. The second is Franklin Kake, Executive Director of CSB Group. Franklin is practicing lawyer with over 15 years of experience advising crypto companies on how to navigate complex regulatory frameworks, particularly in relation to MiCA. Franklin helped Kyrrex to receive current license on Malta and applying for MiCA license. And the last one, it's me, Vadim Rozov. I am CEO of Simplify Labs. We are providing white label solution for exchanges and OTC desk to comply with MiCA requirements, and I will be sharing technical point of view from the product point of view, what should be implemented in the product to apply for the MiCA and successfully receive this license. The second, please feel free to connect any of us on LinkedIn or email, and also my team will pin our contact details in the comment section, and also Calendly link if you like to discuss your specific case after the webinar. Let's go. As you can see, we have several topics on agenda. We will go from the legal point of view, starting with the legal point of view, how to apply for the MiCA, what you should be aware of, and all details regarding to this. And the second, we will discuss technical requirements needed from the practical point of view. And third, it will be Kevin, who will be discussing world implementation and Kyrrex case, how it's going. Let's move forward, and I am asking Franklin to jump in and start with his slides. Thank you.
Thank you very much, Vadim, for the introduction, and thank you everyone who is joining. So really and truly, MiCA, I think by now you are aware of, is closely modeled on the Markets and Financial Instruments Directive, MiFID, and the MiFID regulation. So what this does is pretty much a carbon copy to protect investors in crypto, in the crypto space, just like MiFID does. So MiFID deals with investment services and financial instruments, traditional financial instruments such as marketable securities, debt instruments, and the likes of bonds. MiCA is heavily focused on crypto assets, stable coins, and also carves out certain tokens, such as utility tokens. It also regulates the what we previously knew as the virtual financial asset service providers, whereas now they will be known as CASPs, crypto asset service providers, who basically perform services such as crypto exchanges. What it does, and this transition, so Malta has been at the forefront because we legislated in the virtual financial asset framework back in 2018. And we modeled our legislation on MiFID. The European Commission, when proposing the first bill of draft to be approved by the European Council and Parliament, also modeled itself not only on MiFID but also on our laws. And it used Malta as an example as to how this harmonized maximum harmonization regulation will be implemented across the European member states. What it facilitates is the fundamental treaty freedom under the European Union for the freedom to provide services across all EU member states and the freedom of establishment across all EU member states. What this means is that once you are licensed in one member state, for example, Malta, through a passport notification to the MFSA, you can passport your services seamlessly across all EU member states without the need of applying for an additional license. So this is the scope. Also, apart from what I've already just said, ensuring a safeguarded investor environment and protecting investors and other stakeholders within this crypto market, the idea is that there will be no discrepancies between one member state and the other. For example, a particular case study, Estonia, where it legislated and then issued over 100 licenses. Unfortunately, that experience was not very long-term lived because there were a lot of scammers out there, even though they had a license from the Estonian Financial Services Authority, and there was no proper scrutiny and supervision by the authority. So this time round, this will not be the case, hence the need to ensure that MiCA is in place. Furthermore, in terms of monetary policy, MiCA establishes that only a European centralized authority, in this case the European Central Bank, can issue monetary policy when it comes to currencies. So this means that monetary policies, when it comes to currencies, will be left in the hands of the central bodies. Of course, there's still discussions and conversations held with respect to decentralized DeFis, decentralized multilateral instruments. But the idea is that the monetary policy is maintained within one central body to ensure so that there is no collapse of the economic system within the EU and ensuring there is a free and fair market. So that is the general overhaul of what MiCA is, and really and truly what this slide is explaining. Sorry, okay. So of course, if you want to provide a CASP service, you need mandatory authorization. And Vadim or Kevin, please feel free to stop me because I'm not sure what slides I'm I'm where I mean to stop. So mandatory authorization, of course, the idea of being licensed by a supervisory body, which in this case is the Motor Finance Services Authority, the MFSA. When submitting, of course, entities which already are licensed under the VASP regime, they will be applying to a transitory application, which is a more simplified approach. Kevin, as the CEO of Kyrrex, can vouch for this, that we are going through a simplified approach to transit from a VASP to a CASP license. There's still lots of documentation and updating of the policies that need to be done, of course, but that is just goes hand in hand with a new regulation. So generally, the authorization with the MFSA for a normal CASP would usually take about 9 to 12 months. The authorization requires that all key individuals, directors, and qualifying shareholders having 10% or more in the company would need to be vetted by the MFSA through a fit and proper assessment, whereby the natural persons, individuals, are vetted on their integrity, their competence, any conflicts of interest, time spent, and general experience in the field. When it comes to the applicant, generally it will be the company. The company will need to submit a business plan with the financial projections, an optimistic approach and a pessimistic approach of the financial projections, and most especially the governance structure here in Malta. Together with the AML and CFT policies and cybersecurity ICT framework, especially with the new regulation, DORA, which is very much being emphasized by the MFSA. Of course, as I said, internal governance is a key important factor when it comes to submitting a license with the MFSA. The MFSA want to ensure that there is dual control and within the operations of the company, and also at management or directorship level, there is proper safeguards to ensure conflicts of interest are not only disclosed but also mitigated in the event of one. And what an applicant must also disclose how such conflict of interest will arise. There needs to be a proper risk management policy and procedure, how to avoid these high-risk exotic crypto assets, really and truly, because they're not the traditional financial instruments. And an explanation of how investor and consumer protection will be regulated. So most importantly, there must be a complaints handling, a fraud prevention mechanism in place, amongst, of course, the normal due diligence procedures and policies when it comes to anti-money laundering and CFT. Furthermore, an applicant must show its adherence to the travel rule, which we'll be speaking about a bit later on. Sure enough, there must be capital and prudential requirements. So over here, we're talking about the financial stability requirements. Why? Well, this is a requirement which stems as well from MiFID, and we want to avoid a scandal, as happened recently, of the FTX crypto empire, which collapsed. Why? Because there was not sufficient liquidity, there was not sufficient safeguard to protect investors' money. So now there has to be proper safeguarded in place that the capital requirements are not only met, but they are there to, on a constant basis, over and above any monies received from investors or from stakeholders utilizing the services of CASP needs to be properly safeguarded, and an equivalent reserve must be placed in the event of the collapse of, like it happened to FTX. Insurance coverage is an also important point. This is really and truly applied across all service providers, not only under MiCA. This ensures that the company is properly insured, also in terms of professional indemnity, and also the investors are protected. So far, however, what we've noticed is that whereas for investment firms there's an investor compensation scheme, and when it comes to banks there is depositor compensation scheme, there's no such thing as yet in the MiCA framework. So that is still yet to be drafted, really and truly. So basically, in terms of transition from VASPs to CASPs, this happened already. We have already received by the MFSA certain requirements that we needed to adhere to, and we need to submit updated policies. But the deadline is the end of the year of 2024. There is, of course, regulatory engagement. Luckily, we have a very welcoming fintech department here at the MFSA in Malta, which ensures a smoother transition from VASP to CASPs, and necessary resource allocation. So the MFSA is also interested not just in capital requirements, but as I said, dual control, and also business continuity and disaster recovery plans. What this means is that there has to be adequate personnel. The idea of having a single member company operating an exchange or any other CASP service is long gone. You need to have proper personnel here in Malta, with the possibility of working remote, of course, because at the end of the day, we're dealing with a digital world. But there needs to be adequate personnel, and the MFSA would need to see the capital being invested in human capital.
Yeah, Franklin. I have a question to you, if you don't mind. Right now, many of our clients asking that, telling me that, okay, it is, of course, this year, MiCA, it's already started applying the rules, and from the next year, it will be full implementation of MiCA. But we have some period of time, like grandfathering rule and so far, to operate under the previous license, like for 6 months or more. And I just want to be sure that and ask you as a lawyer. So as I know, the passporting procedure not applying to grandfathering previous license. So you can't operate after from the 1st of January, you can't operate in other countries, only in the country you received the previous license. Am I right? Or it's some exception?
So yes. So basically what the grandfathering clause is that where you obtained a CASP equivalent license, such as Malta, the VFA service provider license, you may be eligible for the grandfathering clause until July 1st, 2026, or until you receive of being grant authorization under MiCA. So the minute the MFSA, for example, Kyrrex at the moment is in the phase of being approved, authorized by the MFSA as a MiCA license holder. Once that is achieved, then you can operate under MiCA and also start with the passporting immediately through a passporting notification. So the transitory period really and truly is the 1st of July 2026 and applicable only for those who have a sort of MiCA equivalent license, which they obtained under their national rules.
But if you haven't received MiCA or didn't apply for that, you can't advertise outside the Malta, and you can't onboard new clients outside the Malta. Am I right?
Exactly. Unless you obtain a national license from that particular host member state.
Yeah. Okay.
But exactly. But you cannot. No, you cannot.
Okay,
So
got it.
only when you get MiCA authorization will you be permitted to start using the passporting rights under the treaty for the functioning of the EU.
So thank you, Franklin. I believe it will be more questions in Q&A session in the end of our presentation. It was like from my side, just clarification for everybody who is attending why it's important to apply for the MiCA at this moment, not in a half of year or later on, because it will be no option to operate in other country except you licensed in. No passporting. And also to summarize, I just want to start my section from the about technical requirements from MiCA, because mostly we see in webinars and presentation legal requirements. So what is important, of course, but I want to mention that applying for the license usually consists of three parts. The first one is definitely people. As Franklin mentioned, you should have adequate team members, and it should be approved by regulatory point of view. Second, and also really important, in technical implementation. When you apply for the MiCA license, you should demonstrate your software solution, how it's working, is it compatible with the requirements, and also it's a lot of technical details under the hood. And third one, it's policies. So it is technical policies and operation policies, but these three parts combining allows you to receive MiCA and operate under it later on. What I want to discuss with you is technical requirements and changes to the software you are usually companies using under the VASP, and what should be implemented. So as a Simplify Labs, of course, we are providing white label solution for that. So it's already implemented, it's already working, and we already applied with this for companies to receive MiCA license. But it can be useful for you if you have own internal development team and you are looking for the exact instruction, what should be done inside your software to be compliant. So first of all, we are starting with KYC, KYB process because it's become more complex than it used to. And you should collect much more information from the customers. It's starting with personal information and the contact information, document, identity document, and then it should be additional question regarding to risk of this customer, regarding to PEP screening. On top of it, it should be financial information collection, and also regulatory compliance declarations. So from the, let's say, usual onboarding from 2 steps, we are going to much more steps and collection information. And you can't receive even first deposit without collect all this information, risk scoring your customers, and thresholding creation for each of the customers. Then we are moving to initial risk assessment, and we should discuss that for each customer, it should be created dynamic customer risk profile and based on several from initial information you collected and behavior on the platform, the different level of risk assigned, and based on it, it can be changed thresholds for these customers. It can be even restricted access to the platform, and so on and so forth. If we are talking about the initial risk assessment, it's of course a geographical location risk, country, customer type risk, also product or service usage risk involved, different like channels risk, delivery risk? Is it will be like credit cards using? Will it be using of SEPA transfers or only crypto deposits and so on and so forth? Also, we are talking about dynamic like risk profile. So it will be transaction patterns. How often person is depositing? Is he trying to avoid thresholds or like daily, monthly, and so on, or is it like big amount on the time? And also initial risk assessment based on, of course, source of funds and business type and PEP status and so forth. So far, when we are moving to the next option, it's also about dynamic monitoring and risk factors. So we should look on transaction velocity, how volume changes, pattern deviations, change of API, for example, counterparty risk. All this should be implemented in the software when we are assigning this risk profile to the customer, and it should be changing over the time. If you are talking about also transaction monitoring system, by the from the regulatory point of view and implementation of this regulatory, you should have on your platform dynamic set of rules which you, MLRO can manage, create new one, and like change the current one. And based on this set of rules, each transaction and action of the customer should be monitored. And based on the result of this monitoring, like or risk change it, or for example, some additional questions should be asked. So customer can be put on hold or by from the MLRO point of view at any point, automatically or manually. If we are talking of like KYT and IML approach, of course, each transaction on-chain or off-chain should be monitored. And you know, all know the like on-chain monitoring. IML from the IML point of view is checking is it dirty money, what's the level of risk involved in each transaction, and based on your operation policies, you should apply some action based on it. So definitely, we are talking right now MiCA related to centralized exchanges, and most of the transfer will be stored on the hot wallet or cold wallet after all, and you don't want any dirty money and on these wallets. And the like last one, but really important, Franklin mentions that he will be covering it later. Maybe he will join to me. Travel rule is really like, it's not even yet finally defined by the regulatory. So the approach, like from my technical point of view, is as banks should be monitoring who is sending from like what account to whom. So you should like collect information about originator and beneficiary, and it's so it's even if you receive a deposit from the cold wallet, you should specify who sent it to you and provide information. This like transaction threshold triggers, it's more than 1,000 euro for any transaction, or its aggregation volume for 24 hours. So also we are talking about like cross-border transfers, but as we know, on-chain transfer can be mentioned. Is it cross-border or not? But you should collect this information, what country of originator it came from. And at this moment, from the technical point of view, like from the user experience point of view, it's really complicated. That's why such companies, for example, SamSap already implemented this travel rules cooperation mechanism when you like centralized exchange sharing the information about the originator, and then you can automatically apply this travel rule based on the address of sender if it's already in the database. Franklin, can you add something about travel rule from legal point of view?
Yes. So basically, the travel rule brings a lot of issues. Really and truly, what the travel rule, for those who just joined in, perhaps, basically, this is based on Recommendation 16 of the Financial Action Task Force, the FATF, and it requires for CASPs to share certain information about originators and beneficiaries of cryptocurrency transactions. Main problems is the privacy concern. That's one of the major issue, and the data collection, and the cost as well to collect such data and transmit it to the various CASPs around the world. The FATF issued guidelines on how to be compliant with travel rule, but there's no universal protocol or system to implement such rule. Also, the blockchain nature of the travel rule makes cryptocurrency transactions, which are invariably pseudonymous or decentralized, technically complex to link the transactions with the real-world identities. There's, of course, jurisdictional disparities. Not all the countries will implement the travel rule. Some have derived from it. And the problem is that, unlike the banking system, where there is the SWIFT, which makes an audit trail of a particular payment transaction, there's no similar equivalent to it in the crypto sphere. The lack of clarity of regulations as well. So certain key players operating on decentralized exchanges are not exactly sure. We still need to wait exactly how this will map out. And also the enforcement of compliance. So there's no enforcement, global enforcement mechanism on the travel rule, leaving implementation to the national regulators, thus creating even more discrepancies from one national regulator to the other. Of course, however, the non-compliance with the travel rule can lead to penalties. It is a necessary step, so the travel rule is a necessary step to ensure regulatory compliance and ensure the European market integrity in the crypto space. However, there are quite a lot of hurdles and technical complexities and inconsistencies, especially privacy concerns around the whole travel rule. And of course, the resource. I mean, think about having an exchange with millions of users, and you need to collect that data and transfer it seamlessly. I think it's going to be quite an apocalypse in the crypto world, but we just have to be patient and wait and see.
About the practical implementation, let's talk with Kevin about the next speaker, how practically we are facing these issues and how we are working with it. Kevin, please.
Yeah, thanks, Vadim. I will not be reading because I just saw the list, and it is like an intro to many things that this conversation has led me to think about, especially the introduction. Very good introduction by Franklin. Thank you. Made me wonder as well how far we have come in this story. I mean, because we started off as Kyrrex obtaining a Class 4 license in Malta. The process of obtaining a Class 4 license in Malta was not at all an easy task, because Malta, together with France only, because Liechtenstein is not part of the EU, only France and Malta were found to be MiCA equivalent, let's say, regulatory frameworks. And that means that our license was already equivalent or ready to be transferred under the fast-track process to a MiCA license. However, when you say it like that, it sounds like it was something very simple. And I'm happy to see these points that are being brought up, because I can share, in terms of real-world implementation, some of the biggest challenges that we have faced as Kyrrex, and how also, eventually, I want to also expand on how Simplify Labs assist us from a technical point of view in getting there and how they can assist others. However, I really wish to start off and taking a step back by assessing the title that you have chosen, Vadim. I like the idea of adapt or die, because it sounds dramatic, but it is truly that, given that from the 1st of January, MiCA will introduce a set of penalties that can be excessively damaging to any operator that is not going to be complying with MiCA. These penalties are, let's say, various, in the sense there are financial penalties that go up to €5 million in value, depending obviously on the breach and the proportionality of the breach. So not all penalties will be in that figure, but they can go up to that figure. Apart from that, we call them NCAs in MiCA, which is the National Competent Authority. So the NCA is also given full discrepancy to decide, and they can determine that they can stop the operation entirely. There can be like immediate orders for even withdrawing the license, losing the license. But what can be made maybe more damaging is that the warnings, these cease and desist orders, these penalties, these findings are also publicly available, which they already are in our case, for example, in Malta, for anyone to see. So when you are operating and you think that you can get away with not complying, apart from the civil or criminal liability of the directors, which is always a case for any company, so it's not just because of MiCA, that is a basic, you have these additional introduction of penalties for certain jurisdictions where it was much more, let's say, relaxed, and you were operating in an environment where you weren't scared of these repercussions. Now these are going to be harmonized across the EU. And therefore, I believe that the title you chose is good, adapt or die, because if any operator is hit by this kind of penalties, it could be very difficult unless you are, let's say, a whale that can withhold multiple injuries. It will be difficult to continue operating in the market following any such repercussion of non-compliance, let's call it that. So moving on to the adapt part. So how can therefore be adapt? I also like the word adapt because it doesn't mean you have to obtain a license immediately, and I will explain why the resources are what they are and the difficulty to get there and what we had to invest in. But you can also adapt by partnering up initially with other entities that have gotten this, like us, and then eventually building up yourself to obtaining your license if you want to, even within a more, let's say, experienced MiCA environment. Why? Because this is going to be a guinea pig environment. We are going to be the first lot, the first set of licenses obtaining this MiCA license, and therefore it is almost an uncertain or an uncharted territory initially. So even that learning curve for the regulators, the national competent authorities that I mentioned before, and the operators is going to be a process that can take a bit of time. This, for example, we experienced when there was the whole discussion on whether USDT would remain available for public consumption on regulated exchanges within the European Union. Why? Because MiCA has certain requirements for stable coins and listing of such stable coins, and therefore there was an entire uncertainty until the very last day of when the trigger of the law was, let's say, applied, and therefore that was our first experience of us in the field asking the regulator, and the regulator also asking the European authorities, and everybody trying to predict what's going to happen. Why? Because it was the first time that this happened, and we're going to have first times moving ahead. And therefore, this brings uncertainty for any operator who wants to operate in Europe without a license. And that is why partnering up with a licensed entity or getting the expertise of a white label solution to what Simplify Labs is offering is a very good entry point for anyone to feel safe and secure in operating in the market. I will explain some of the points you mentioned here, because you have listed limited access to spot trading, obtaining regulatory license difficulties, ensuring compliance with KYC, transaction monitoring, and security requirements. So some of the things that you have mentioned, I will not repeat. So let's say the capital requirements or the obtaining of a license and the process for that, I will not go back to that. So what I want to go a bit more in depth is how the whole risk framework works under MiCA and why this becomes resource intensive, and why everyone needs to understand that is not simply a process of filling out an application form and employing 3 people, putting them in an office and saying, this is my CEO, this is my MLRO, and happy days. That is over. That was pre-MiCA. Why? Because simply looking at the requirements that emerge directly from MiCA, if we take just, for example, the customer due diligence, we must also appreciate that the legal framework works in Europe as an ecosystem with the rest of the regulations and directives. So therefore, for example, MiCA does make reference, and it also obliges entities to comply with anti-money laundering directives that are also issued by the European Union and must also be adhered to by the operators. And therefore, suddenly MiCA becomes a much larger body of law. That means that you have to establish not only internally a compliance system that does follow the MiCA requirements, but also one that follows the anti-money laundering regulations and directives. And this means that, for example, there is a strong drive towards a risk-based approach. How does that influence or impact operators who want to operate in the market? So before you mentioned, and here you say, compliance with KYC. And one can think very simply, of course, I identify my customers and I verify them because I have some software whereby they check that the name and surname and the image on their, let's say, ID card matches the name and surname. They check for sanction, and I'm happy to go. That is definitely not enough and non-compliant at all with any of the obligations you have under MiCA. That is the very, 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 very first step. Why? I will explain. Just not to take everyone's time, but I will explain for everyone to understand when we say what is the risk-based approach and what it means to have a very robust risk management framework. The very first step is the national risk assessment, which every country, every member state carries out. And it is not carried out by the NCA in this case, but the FIU of the state. So the Financial Intelligence Unit have a system whereby they create a national risk assessment. Every entity operating within that member state has the responsibility to annually update and therefore initially create a business-wide risk assessment, which we call a BRA. That means that before you start creating your customer risk assessment, which you will apply for every customer in order to be compliant with MiCA, you need to first have your own business risk assessment. Why? Because it will analyze what were the outcomes of the national risk assessment, what you're going to operate yourself as a subject person or as an operator, and then merge the two to check what risks emerge and how you're going to mitigate those with your controls. Then that will create your risk appetite. Based on your risk appetite, you will create a customer risk assessment. Why? If a customer results to be of low or medium risk, you can go on with onboarding and certain rules apply. But if at a customer at onboarding stage, based on different customer appetite, let's say, measures which you have to create internally based on your appetite compared to what the national risk assessment is saying, you set in order to create a high-risk scoring for certain customers. So, for example, some operators will say, if a customer is emerging from a high-risk jurisdiction and is politically exposed, I will not be happy to onboard. However, if a customer is politically exposed and is emanating from a lower-risk jurisdiction, I will be happy to take that risk and create a structure where I can monitor them more deeply. Just to give you one example here of when we say, therefore, every customer needs to be screened for customer risk, and that you have to have a robust enough system that has a risk management policy within it, I just gave you in 2-3 minutes the very complex process and the resources you have to have internally to carry this out. I will give you other examples. Right now, there is the introduction as well of more stringent rules on IP monitoring. There is more stringent rules on assessing high-risk jurisdictions, both from a user point of view and a service point of view. There is stringent obligations on checking related activity of the customer, so it's not just where the customer is emanating from, but any related activity. Source of wealth and source of funds, depending on the risk, have to be assessed, and some of them documented. Apart from that, there are obligations that you have to apply transaction monitoring. Now, this is a bit complex because people think, yeah, of course, I'm registered with let's say, a transaction monitoring tool that is a blockchain technology system. It analyzes cryptocurrency transactions and gives me a flag. That is not, again, that is a small part of what MiCA is understanding by transaction monitoring. You need to have advanced systems that are automated, in which you are checking for 3 main elements. One is the match between the customer's profile and the customer's activity. The second one is between the customer's activity and the customer's history. So therefore, this definitely has to be automated. When you have thousands of clients like we do, you cannot be doing this with an Excel sheet and with 3 people around the screen. And the third one is any unusual activity or large risk transactions that are out of line with your general operating structure. For you to adapt these rules into your structure, you need to have an automated system that does. So when we say MiCA triggers the need for enhanced KYC, for transaction monitoring, ensuring compliance, security requirements, this is not just having a policy or a document. This is much more complex. You need to have the technology, you need to have the resources, and you need to have, yes, the policies that are backing up all this. Not to mention reporting obligations that emerge from this. So what do you do when you actually have any suspicious activity? There are reporting obligations to the member state, NCA, as I mentioned before, or the FIU, or both. There is also the obligation of record keeping. Record keeping must be in line with data protection rules that emerge from the GDPR. So once again, here you are seeing another legal structure that is overlapping with MiCA. Why? Because not only are you obliged by MiCA and by your, let's say, legal obligations as an operator to keep these records, but then you are obliged by the GDPR to make sure that once the time frame for which you need to keep these records is exceeded, you destroy those records. So you can imagine how complex that can get when you have thousands of clients onboarding and offboarding in different dates. And these 5 years that emerge from the law are triggered from the moment the business relationship ends. If you look at, for example, financial risk controls, we mentioned thresholds. Yes, you need to have multiple thresholds to ensure that the risks are mitigated in offering customers the opportunity to use the product and abuse it in any way. And therefore, there's also going to be an introduction now of the questionnaire as per MiFID requirements, in which you understand the level of understanding of the customer with regards to their operation. Then there are bigger things, like, let's say, for example, bigger things in terms of how resourced you need to be, which are like insurance or an established contingency fund to mitigate the impact of any unforeseen events for all the funds you're holding on behalf of your customers. So just safeguarding of these has not just become an obligation of the right policies in terms of liquidity management, hot and cold wallet management. No, you also need to have the guarantees that you can show to your regulator when you are actually carrying out these functions. Apart from the fact that all your cybersecurity standards are now going to be checked by the regulator. So you're looking at a business continuity plan, a disaster recovery plan that is not only, if you know what I mean, a ChatGPT create for me a business continuity plan and you give it to the regulator. And that doesn't work at all. Why? Because it is tested by an IT audit that is done annually in accordance to MiCA. It is tested by an internal auditor that you have to engage to carry out quarterly cycle assessments on all these policies and procedures, in which the outcomes of which are constantly reported to the NCA. So, to cut a long story short, Vadim, I can give you 3 hours if you want of all this that you need to do to be MiCA compliant. I haven't even scratched the surface, I'm being honest. Because, like, for example, if you're going to engage anyone, you need a third-party risk assessment. To carry out the third-party risk assessment, you have to document it. It goes to the chief risk officer. So we talk about MiCA as a law, yes, very complex. But the implications on an operator are extensive. So what I wanted to discuss with you, I think you have put up this slide about white label solutions, is operators that want to work in the market and want to start offering the services in the market and are not yet, I'm not saying that they do not plan to be, but are not yet ready to be MiCA licensed because of all these things. Our, let's say, suggestion or our proposal is that we are saying we are already doing it with some good willing operators who want to go down this route. We provide the option for users to actually, for operators to actually partner up with us in a program whereby we can either assist this operator, and in that case, we usually work with our sister company or rather than call it sister partner company, Simplify Labs, that give us a lot of these technical solutions, and we are happy that you have asked us to explain the benefits we get, because from a technology point of view, from a software point of view, you are there to assist us on all these requirements that I mentioned. We then give more of the, let's say, compliance point of view, our policies, our procedures, our implementation of what MiCA means in terms of being compliant with the regulators' requirements and reporting this. Whilst Simplify Labs can definitely come in with the technological solutions. And by white labeling the product, you get a sub sort of license, because you enter the license that we currently already have, that is MiCA-ready, and therefore you can operate within the industry, making your own profits and making your own markup without initially needing to have all of the requirements in place. And you can build that up as a stepped approach. This is something that is not only our idea. This is something we have discussed with the regulator. It has been approved by the regulator. We have rules on how it is to be done. We even have rules on how to notify the regulator. So it's not something we are inventing. This is not something where we're trying to be passing through the window instead of the door. This is something that is also contemplated in our regulatory framework. And we do offer that solution for anyone who wants to go down that route. I'm sorry that I exceeded my time. I think I have to stop, Vadim. I have said too much.
You're sharing brilliant, so it's worth it. But yeah, at this moment, I believe we can start with like Q&A session and maybe cover some of the topics, like continue with the information you shared. So let's move further to the question. And first of all, I want to answer, yeah, it will be recording and it will be available to everybody registered to this webinar. So don't worry if you miss some parts or want to like refresh information. Let's start with Simplify Labs. What Simplify Labs is offering. We are offering technical solution which is MiCA compliant, and as a software developer, and we provide software. Of course, we on top of that helping to create technical policies to how software is working under the hood. So you can use it as a part of your applying process. Other part as a people, you should hire, and operation policies, of course, you should create your own. So another option is what Kyrrex is offering. Kyrrex, it's a white label of the, let's say, operating under Kyrrex license. And it will help to not to build, like apply later on, or to not start from the scratch and continue operating under your current with your current database and customer base and so on and so far, but with like step-by-step approach for applying for the MiCA later on. White labeling, Kevin, correct me if I'm wrong, can consist of as on-ramp, off-ramp, and custody solution, or it's direct onboarding on the Kyrrex as a customer, but with front end of yours.
We can offer both solutions. Actually, three. You talked about the technology part, which they can get from Simplify Labs, that doesn't actually touch on Kyrrex or Rex as a licensed entity. And then the other two, which touches, let's say, our product offering, yes, we do. First of all, to answer directly, offering a MiCA compliant white label solution, yes, for sure. But there are two types, okay? We will be offering either the option of an entity having, let's say, its own, as you said, front end, and you are seeing therefore you're interacting with the client, and they will still be, let's say, liaising on a customer support basis with the client that is using the white label. However, the onboarding process, the actual transaction monitoring, the MiCA compliance technology, the policies and procedures, and all this is managed entirely by Kyrrex. This is disclosed to the customer, and the customer in its fine print, and when it's accepting to onboard, is understanding that there is an operator that is offering this service. I mean, needless to say, most operators in this field around the world, MiCA or not, are also executing most of their orders on other third-party venues. So this is not like something that is we are reinventing the wheel or creating something logically different from what is happening on a larger scale. But this would give you MiCA compliance. The second type then of opportunities for those operators who wish to continue operating within their field with their own setup, but require, as you said, an on-ramp off-ramp solution. And for that, we can offer an integration that is not a white label solution, but in which they integrate with us for the provision of certain exchange services for their customer funds that are then exchanged on our solution, or else using us for on-ramp and off-ramp with our payment providers, payment solutions, payment gateways. Now, with regards to the provision of IBANs, because someone is asking, therefore, how are we managing the provision of IBANs? We are working with third-party integrated banking solutions. We would obviously disclose those under NDA with any prospect, but all I can say is these are all regulated IBAN providers. We are also under the process of obtaining an EMI license for the provision of our own IBANs, but for now, until that happens, we have third-party providers. We do not have one. We have over 3 for now. And that means that your client is guaranteed that, by and large, if they pass through the onboarding process, they will be provided with their own IBAN, in which they can actually fund their account or withdraw from. I hope that answers the question, Vadim.
Yes, thank you very much, Kevin. So also I see Franklin is actively answering the question in the chat. So guys, don't miss the chat part and check the answers. Franklin, if you want to speak it loudly, you can right now.
Yes, yes. I was just taking advantage of the chat. No, basically, someone's asking about the same capital funds needed if a VASP is partnered with you. If you are under a white label, you are really and truly piggybacking on someone else's license. So that means you don't need your license yourself. And that is what we are discussing over here, a white labeling solution, really and truly. So in that case, there's under white label solution, there's no need to apply for authorization separately. So Grahampton, I didn't understand the question. Is the protection of database? Of course, I mean, GDPR applies to customers.
Yeah, can I answer this, Franklin? Sorry. Okay, I believe Gra is asking about if it white label, Kevin, it will be some separation of the customer for the white label client and for the Kyrrex client. And as I understand, and correct me if I'm wrong, all the customer under the white label will be clients of the Kyrrex itself. So it's impossible to separate customer from the white label and not white label. They should be informed in advance that they are becoming customer of Kyrrex. It's
Yes,
not like hiding.
yes. The only distinction that we will retain and the only China wall that will exist is on marketing level. So we retain the right to have the customer as our own, because otherwise we cannot operate the exchange in compliance with the regulation. Why? We must be allowed to ask any questions to the customer with regards to compliance, source of wealth, source of funds, any suspicious transactions, etc. But with regards to any marketing, promotions, any, let's say, commercial correspondence with the customers, those will also be customers of the white label solution, and we vouch, obviously, and undertake in our agreement that we would never be communicating with the clients on anything that is commercially based. So obviously we act only as operators in this case, as an engine to the white label client, not as though these customers are our own clients. Otherwise, obviously, nobody would be operating with us.
Yeah, I just want to compare it. I believe it's a new thing to the crypto market at this moment, and it's like, but we can compare it with payment service providers operating under the sub-licensing of some EMI or banking licenses. So it definitely mentioned on the website they are operating under the license of third-party provider, but all communication and marketing approach and financial is managed by the end company who is providing these services to the end customers. Okay. The MiCA license will be obligant for VASP which wants to work in ES. Yes, of course. EU, European Union. Of course, it's like it's already starting the like implementation process, and for the stable coins, it's a huge part of the MiCA license. It's already in place, and you can find USDT, for example, on the centralized exchange in who is like operating under in the Euro Union.
With regards to Sui's question, if they end the white label engagement, we would have a process by which the customer would be informed that the operator will not be providing services anymore, and therefore any assets under custody would need to be provided with a destination, let's say, address in which they need to be transferred. Now, obviously, this can be liaised with the white label provider in that they provide the customers with their own, let's say, venue where we are going to be transferring these funds. And unless there is any complaint from the customer or request for that to be in any way different, we will comply with that. So if you find then a solution which is in-house or which is with another third party, as long as we inform the customers and there is no customer that is saying, no, I do not wish that, because obviously that will be our first obligation in terms of law to follow the customer's instructions, then we will comply with that. So if the white label is a good service provider, there is no reason why they would lose any of those funds. But if they do, it is not because we would retain the customer, not at all. It is because we will ask for a destination venue and we will follow the instructions, not retain the customers ourselves. This is not a scheme by which we want to take other operators' customers, obviously. Otherwise, it wouldn't work, as I said.
Okay, we are right now in the short of the time. It's already more than 1 hour. I see additional questions, but don't forget you have all our contacts, emails, and like LinkedIn, so you can contact directly if you're looking for white label from the exchange. You can contact Kevin by email if you are looking for.
Vadim, also may I add, feel free to create any 15-minute, 30-minute video calls we can hold with anyone to answer, because I have a lot of answers to many of these questions, but I'll need time. So feel free to set them up and I will join. Very happy to do so.
Okay. And the second one, you have linked to Calendly, my Calendly personal, so you can create a meeting with me and schedule it. And if you can put in comments if you need also Kevin be presented. or even Franklin, don't hesitate to mention, and I will organize everything. If you're looking for technical solution, you can speak with me directly, and we will find the way to provide you this technical solution. So the last one for the travel rule, it's developed solution, white label technical solution, which we develop inside. For KYC, we are using several providers you can choose, so we can implement. It's can be SumSub, it can be Onfida, it can be any other. For KYT, we using chain analysis at this moment, our main provider of on-chain data analysis. So let's thank you everybody for attending. Thank you, Frank. Thank you, Kevin, and also every person who stayed with us all this time.
Thank you very much. It was a pleasure. Thank you.
Yeah, video will be provided to you, and don't forget to book meeting with me. Thank you. Have a good day.
Thank you. Bye.